This is Cincinnati Edition on 91.7 WVXU. I'm Lucy May. Higher interest rates and eye-popping home prices are making this a tough time for first-time home buyers. So is the American dream of home ownership still attainable? And when is renting a better option? Joining me now to address those questions are Associate Real Estate Broker Alrosser. Welcome back, Al.
Thank you.
And Northwestern Mutual of West Chester and Dayton Senior Financial Advisor Ken Wilson. Thanks for being here, Ken.
My pleasure.
Do you have questions about whether it's better to rent or buy, or how to build wealth as a renter? Give us a call at 513-419-7100 or email talk@wvxu.org. Al, so many Americans want to achieve this American dream of home ownership. Talk about what that dream is and just how long that's been kind of in the goal for so many people.
Wow. Well, it's been in the goal, I guess, in our country, probably since around the 1930s, 1940s, when programs like FHA and those were created kind of after the Depression and those kinds of things. And so it became more attainable, or at least programs became available for people for the average person to be able to buy real estate and have assets. So if our country does go into another financial crisis like that, then the average person has something to fall back on and some asset that they can utilize in various manners. So it's been a goal for a lot of Americans for a very long time, 100 years now, right? Almost 100 years, yeah. About 90 years. But it has become more and more obtainable by more people because of the programs and so forth, lending programs. And of course, there's always been ups and downs, as there always is.
Sure.
In the financial markets and real estate markets and everything else. So.
Yeah. Ken, it's not for everybody, though, right? I mean, there are some people for whom home ownership just isn't a good idea for a variety of reasons. Talk to us about that.
So owning a home obviously it requires some type of financial means, and it's timing, and everyone is in a different place. We all have unique, what I call financial DNAs. Not everyone has the same, financial fingerprint. And so for some folks, the timing is not right, or their financial situation is not right, and there are benefits to renting, that there's pros and cons to every financial decision that you make, whether it's owning a home or renting. There's pros and cons to a 401k. There's there's pros and cons to owning stock, and so the home ownership falls in that same realm.
Sure, where you're going to put those assets and invest your money.
Correct.
So, Al, is home ownership accessible for millennial and Gen Z generations, or for first-time home buyers who maybe don't have generational home ownership in their past or generational wealth?
Generally, I would say yes. But as Ken mentioned, everybody's situation is a little different, right? Everything is not for everybody. It is available to theoretically to anybody, but of course you have to be in a financial position to be able to purchase. And some people, it is more beneficial for them to rent. However, generally speaking, when you're renting, people talk about interest rates. When you're renting, you're paying 100% interest because none of it is going towards any equity. You'll never see that money again. And yet people get discouraged, so to speak, because rates hit 7.5% or 8%, right? Well, I might as well rent. Well, you'll never see any of that money again. And with rent rates being higher than typical and going up, it's almost a trade-off on the monthly expense. However, again, you'll never see equity in rent. And so generally, buying is better in the big picture. However, everybody's individual situation dictates what they should be doing right now.
Yeah.
Right.
I want to ask you about that a little bit too, Ken, because I know a lot of younger people or people who don't have home ownership in their family background or generational wealth. It can be really difficult with those, even though you're saying 100% of the interest goes to rent. I get that. But with the higher interest rates, with these home prices that seem real high compared to what they were pre-pandemic, it seems like there are some young people who are saying, I don't know if I'll ever be able to afford a house. Is there a way for them to rent and build wealth in other ways so that that home isn't the big asset they're counting on? They've got other ways to build wealth.
Yeah, there absolutely are other vehicles to use, and I talk to millennials and Gen Zs about these strategies on a daily basis. And one of the things that I do initially is I just want to encourage them, because home ownership is not necessarily the end-all, be-all. There are, like I say, pros and cons. In order to own a home, you have to come up with money. You have to have capital out of pocket. You have to have a certain level of credit. That can take time to build. Once you're in a home, I'm in a home right now that I've been in since 2007. Over the course of that time, I've replaced 2 air conditioning units. I've replaced a refrigerator, a washer, a dryer, and a range. There's landscaping costs and maintenance, and so it is expensive to own a home. And so while you're renting, it's an opportunity to accumulate assets and capital and be in a position when the right opportunity comes.
Yeah. Ken, well, let me come to you, Al. You've talked about some of the benefits of home ownership, the fact that you're investing, but there are these extra expenses. I mean, when you're a homeowner and something's wrong with your roof, you can't call the landlord and say, hey, there's something wrong with my roof. You got to deal with that. What are some of the pros and cons that you talk to potential clients about to make sure they're ready? What do you really say, hey, it's not just about that down payment and being able to make that mortgage payment? How do you educate people?
So we talk about not being house poor, right? And house poor essentially means that you're paying so much to own this house that you have no money to do anything else, whether it's invest or just enjoy life, buy things, go out, enjoy, right? Not to mention, right, the expenses of repairs and those kinds of things. So it is important not just to put people in homes, but also to make sure they can stay in the home. But there are things out here to help with some of those repairs and things. There's something called a home warranty, which is not homeowners insurance. This warranty covers the mechanics and the appliances and those things in the house. You pay a yearly fee, maybe $600 to $800, depending on the policy. And then you pay maybe $75 or $100 for them to come out, repair it, or replace it, which is a much more affordable way to handle some of those expenses. And so, there's always ways to look at, how to make these things feasible, affordable, and manageable for somebody to own real estate. However, some people are not ready. And if they're not ready, then they rent. And if they're renting, hopefully they're preparing themselves to be ready to purchase at some point. As Ken mentioned, they can invest some of that money and save and have those down payments and be ready to do that.
Yeah. We do have a caller on the line. Hey, Barb, thanks so much for calling. What's your question or comment?
My comment was, we have an organization in Cincinnati called Renting Partnerships, and it's an affordable, rent, seriously affordable, $700-800. Money is put away for you every month. You have responsibilities in the rental unit. They usually have 2 to 4 units in these places. If you complete your chores every month, which are not like pipes or anything like that, then equity is put away from you. And after 5 years, you have to stay there 5 years, you can take the money. Now, at that point, you'll have some equity, and you'll know what it's like to possibly own a home. So I'm wondering if anybody's aware of this and how we could biggie size it, because I think it's an excellent opportunity for both low rents and understanding what it is to have a house. Thank you.
Sure. Thank you. And what's the name of that program again?
It's called Renting Partnerships.
Renting
They just
Partnerships.
opened a place in College Hill. I just went to their opening. Yeah.
Okay. Well, thanks so much, Barb. Are either of you familiar with that?
No, thank you. That's the first I've heard of it, but it sounds like something that, could help a lot of people.
Worth looking into.
Yeah, I'm not specifically familiar with that. I do know CMHA has what's called the self-sufficiency program to help people go from Section 8 to homeownership, and they do some kind of matching of dollars and helping them get to that point. There have been programs in the past where if a person has saved money, then that program will help match certain dollars to accumulate, monies. I think some of the other programs, WIN, may offer something similar. And so there are some similar ones, but not identical to that. So that is very interesting to hear.
Thanks for that call, Barb. We appreciate that. Sounds interesting. We have another caller. Hey, Suzanne, thanks for your call. What's your question or comment?
Hi, I just wanted to say this is a topic that's really close to me because I just became a first-time homeowner in September.
Congratulations.
In my mid-50s, and I've been renting my whole life, and I never had any desire to own a home. And as I was trying to find a place to rent, the rents were just prohibitively expensive, and the space was so small that I approached the owner of my house and said, is there any way that I can purchase this house? And just a little background, I work part-time. I have a pretty high debt-to-income ratio, but I worked with an incredible realtor whose goal was really to help people in a situation like mine, and she connected me to a credit union, a very small credit union on the west side. I'd never heard of them. And between her and my loan officer from the credit union, they were able to make it possible for me to buy my house. And I can't tell you how much peace of mind I have knowing that I'm not going to have to rent to move, and that my my mortgage payments are incredibly affordable, and I don't have to worry about my rent going up.
Ah, well, congratulations, Suzanne. That's wonderful. Thank you for sharing that story.
Yeah. And I think that's an awesome story as to how certain situations it makes sense to purchase, and some others maybe not. But for her, it seemed to make total sense.
Yeah.
And she was able to find a way to make it happen because rents were really high compared to what she, would purchase for. So.
Yeah. Ken, how do you help people decide if what's the best decision, if they're ready to buy a home or if it makes more sense to rent? And I guess I'm wondering, does the amount of time somebody plans to stay in a place play a big part? Because I would think you're not going to buy a house if you're planning to move in a couple of years.
Yeah, that's a great question. So what I do is I help people create long-term financial strategies, long-term financial plans. And with a plan, I think you can accomplish anything. So there are like 4 points that I encourage people foundationally to incorporate, and then we build a plan from there. Number one is you need to be contributing to a workplace retirement plan. You need to be contributing to a 401k, a 403b, whatever your employer offers. That is critical. Because at the end of life, you can take out loans for a house, you can take out loans for your kids' education. There's no such thing as a retirement loan. So that is fundamentally one of the most critical financial objectives that we help encourage people to achieve. Number two is to have an emergency fund, to have 3 to 6 months of liquidity, cash savings in the case of an emergency, loss of employment, etc. Number 3, eliminate all credit card debt. And then number 4, have life insurance. That it is literally irresponsible to not have a legacy plan and a plan to provide for you, your family, in the event of a tragedy.
Yeah.
And it can sometimes take years to check all 4 of those boxes. And then once all 4 of those boxes are checked, now we're in position to address some of these other priorities like home ownership. It sometimes requires behavioral changes. Some people are addicted to luxury brands and Louis Vuitton and traveling. And, we have to get all of those behaviors under control. And once somebody is spending less than they make, then anything is possible.
Al, what about this idea of how long you're going to stay in a home? Suzanne sounds like she's somebody who's planning to stay in the house she just bought long term, but clearly if you think you're just going to be living in a city for 2 years, 3 years, it really doesn't make sense to buy a home, does it?
Correct. Now, I'll say with the caveat of if your employer is going to purchase the house and you're going to live in it, then that's a whole nother story.
Relocation
right?
benefits.
Relocation, take it, right? But I ran a couple of calculators actually earlier today, rent versus buy and how much time. And it seems at this point with interest rates about where they are and rental rates, it's about 5 years is the kind of area.
The minimum.
Yes, where you should stay. And most people, at least, and I haven't checked this stat recently, but it used to be 5 years was kind of the turnover. Where people would live in a house for about 5 years before they decided to upgrade. And of course, that was average. Some people much longer, some people less. But so if it's going to be less than 5 years, depending on where you are and depending on what rental rates are, kind of Suzanne's situation, right? If rent is so high that it just makes sense that in 3 to 5 years, you're not going to earn much equity. At all. However, it's still a personal decision you make, right? Because a lot of times, if you're going to be in a city short term, that's where adjustable rate mortgages may make sense because you have that teaser rate, very low teaser rate for the first couple of years. So then you are earning a little more equity and you ideally are going to sell the house and move before it starts to adjust. So it's a matter of doing the numbers, looking at the details, making a personal decision as to what's right for you, and not just going off of generic information given by whomever, so-called experts, right? Yeah. Like us.
Ken, one more quick question for you. How does somebody build wealth as a renter and prepare for the aging process? Because a lot of people think about if they have a home, growing old in their home, but if you're renting, your needs might change as you get older. How do you build wealth and prepare for that?
So home ownership is historically has been one of the primary ways that people built wealth. In the absence of owning a home, again, you're going to have to contribute and invest in what's called qualified savings, and it means qualified for tax considerations, whether it's a Roth or IRA or 401k, and then the other way is to invest into stock market, into other investable or appreciable assets, and I would highly recommend that you get with a investment professional or an expert to help you decide how much for how long, etc. But the equity that you can gain in owning a home, my daughter-in-law came to Cincinnati to go to University of Cincinnati Med School, where she met my son. She bought a house knowing that she was only going to be in med school for 4 years, but she bought it in 2019 and then sold it in 2023 and made about $80,000. So it's luck, it's timing, but the number one thing is to save. You have to save money. You have to live off of less than you make. And that it's the foundation of building wealth.
Yeah. Good advice. I've been talking with associate real estate broker Al Rosser and Northwestern Mutual of Westchester and Dayton senior financial advisor Ken Wilson. Thank you both so much for your time today.
Thank you. Thank you for having us.
You've been listening to Cincinnati Edition on 91.7 WVXU. Our producer is Selena Reeder. Associate producer is Asia Johnson. Technical director is Marshall Verbsky. And Rob Fetters composed our theme music. I'm Lucy May. Thanks so much for listening.